SIA is in inbound logistics, which means airline must ensure all planes are properly filled. They must also use proper route management to aid in the efficiency in which the planes travel. To maintain the daily operation, SIA does scheduling flights and crew hours for the ticketing and onboard service. SIA have 5 types of cabin. First, suite, first class, business class, premium, and economy class. SIA does cafeteria that offers wide range of food options in each of their flights. Second, SIA also does in-flight entertainment system which known as Chris World. There are few subsidiaries with SIA. First, for providing food service are Singapore Airlines and Silk Air. Second, for budgeted airline are Scoot and Tiger Airways. Lastly, SIA Engineering Company, which handles maintenance, repair, and overhaul MRO business across 9 countries. For financial performance, the group total revenue had decreased from 14,558 million in 2016 to 14,246 million in 2017. However, lower fuel hedging loss and average jet fuel price provided an 891 million saving to the group. Consequently, the group's operating profit was 58 million lower at 623 million, about 8.6% of decrease for the financial year ended 31st March 2017, with the exception of Singapore Airlines and SIA Engineering. Operating performance for all other major companies in the group improved over last year. Singapore Airlines earned an operating profit of 386 million in the financial year. However, it is down 99 million compared to 2016. SIA Cargo also reported its first operating profit for 6 years, it are 3 million. For the social performance to the environment, in 2016, SIA has set target to reduce the electricity use 15% and 30% of generation waste. However, in 2017, SIA is achieving the target set in 2016. There are new targets set in 2017, which is reducing the use of paper. During the past financial year, for long-standing policy to maintain a modern and fuel-efficient fleet which is kinder to the environment, SIA recently took first Airbus A350 in 2016. However, in 2017, they took 10 more of Airbus A350 and 20 Boeing 777, 19 more Boeing 787, which helps in reducing the emission of carbon. For the community, as usual in 2016 and 17, SIA take part in a lot of fundraising activities and gave financial support to the beneficiaries for 60 destinations all over the countries such as China, India, and Germany.
Looking at the comparison of the group financial statistics between financial year 2015-2016 and financial year 2014-2015, we can see that the group has an increased operating profit of 271 million to 681 million despite a marginal drop in the group revenue from 15,565 million to 50,288 million. And looking at the breakdown of the expenditure, it shows that the expenditure on fuels before the hedging was 1.442.6 million lower because of a 40.9% decrease in weighted average fuel price from $105.6 to $62.4. Strengthening of the USD against SGD, a 0.5 increase in volume uplisted from 30.4 million to 60.4 million. Aircraft maintenance and overhaul costs increased 95 million, mainly due to more scheduled checks and higher components costs. Staff costs rose 56 million, largely attributed to a higher provision for profit sharing from better financial performance. Other costs declined for 61 million, mainly due to foreign exchange gain of 10 million against loss of 35 million last year. And also looking at the chart, we can see that the fuel costs took up a big percentage in the group expenditure, 31.1% of the overall expenditure. During the year, the reduction in the net fuel cost also resulted in the reduction of expenditure by 4%, hence resulting in the difference in the financial cost between the financial year 2014-2015 and 2015-2016.
From the Singapore Airline Limited annual report in financial year 2015 and 16, we can note that under the old accounting standard AASB 117, companies that lease asset account based on its classification as either capital lease or operating lease. Lessee recognize capital leases as asset and liability on their balance sheet, but operating leases are not recognized on the balance sheet. The leases that appear in financial statement only as rent expense and disclosure item. However, as the new lease accounting standard AASB 16 will be enforced from 2019, they removed the classification of leases as being either operating or capital. AASB 16 will completely change the reporting and management of these leases and their expenses. Most leases will need to find their way onto the balance sheet, with exemptions being those that are short-term and low value. For capital lease, lessee will amortize right-to-use asset separately from interest of the lease liability on the comprehensive income statement. For operating lease, lessee will recognize a single total lease cost. The cost of lease is allocated over the lease term on generally straight-line method. They will classify all cash payment within operating activities in the statement of cash flow. This also impacts on the timing of expense recognition in the profit and loss account over the period of lease, as the depreciation and interest component of lease expense under the new accounting standard will be higher than the current accounting standard. The standard requires additional disclosures to help users of financial statements better understand the amount, timing, and uncertainty of cash flow related to leases. Leases will disclose qualitative and quantitative requirements, including information about variable lease payment and option to renew and terminate leases. The reporting change could affect financial ratio, and it has implications for debt covenants. They might also lead to the higher borrowing costs for leases.